Matthew Warren, hello to you. Matthew,
Hello,
European finance ministers hard at work again.
Yes, that's right. Working late into the night, as they always seem to do. This time, they say that they've found agreement on who should be on the hook, at least first in line on the hook, when a bank fails. And the main outcome is to shift the burden from taxpayers to creditors, shareholders and savers. Well, it's just one part of the plan to create a Europe-wide banking union. Here to explain is William Hildebrandt.
After 7 hours of late-night talks, EU finance ministers struck a deal, capping the amount national governments can contribute to bailouts and passing on part of the cost to shareholders and depositors with more than 100,000 euros.
For the first time, the principle's clear that when banks get in trouble, not the taxpayers but the owners and creditors of banks will have to pay.
But a thornier issue lies ahead, creating a single resolution authority, a sort of executioner deciding whether to shutter or restructure bad banks. It would enable the European Commission as a final decision-making authority, but Germany has said such a move would require changes to EU treaties. Officials will table proposals as early as next week and hope to have it complete before the European Parliament adjourns next May. And that's not to be confused with the single supervisor, an authority that will directly oversee the 200 largest banks. Divisions remain over the scope of such a body, but the hope is that it could help avoid collapses such as Spain's Bankia. But if there is a collapse, finance ministers have already earmarked 60 billion euros from the Eurozone's bailout fund to pump cash directly into troubled banks, alleviating national treasuries and government balance sheets. And so while progress has been made, finance ministers can count on many long nights ahead.
That report from William Hildebrandt. Well, banking union is one of the issues on the agenda when European leaders meet in Brussels to start 2 days of talks later this Thursday. To find out more about what else they'll be discussing, we'll cross live now to our correspondent in Brussels, Frederic Simon. Thanks for joining us, Frederic. Tell us, first of all, what are leaders going to be talking about today?
Well, youth unemployment is again going to be top of the agenda today. You may remember earlier in February, EU leaders agreed to set up a €6 billion fund to tackle youth unemployment over the next 7 years, running until 2020. Well, EU leaders should take a decision today to front-load these €6 billion over the coming 2 years instead, 2014 and 2015, so that the impact of the initiative can be felt more quickly. And EU leaders won't be stopping there. They will also take steps to ensure that crisis funds mobilized by the European Investment Bank can be disbursed more quickly, especially when it comes to funding for small businesses. The hope is that all these measures taken together could act like a shot in the arm for the European economy.
And Frederic, we've seen some conflict recently between France and the EU. Is that likely to continue?
Well, yes, a few weeks ago, you remember the European Commission confirmed that it would give France 2 more years until 2015 to meet its budget deficit target. But it also made clear that the extra time would only be given in exchange for commitments on reforms, including raising the retirement age. Now, this has led to a dispute between Paris and Brussels, with President François Hollande saying France would not tolerate being told what to do to reduce French public deficit. The summit today is expected to endorse economic policy recommendations for each of the 27 EU countries, and Hollande will be pushing today to remove any reference to raising the retirement age.
Frederic Simon, thanks ever so much for joining us. More trouble in Europe, meanwhile, Matthew, in Portugal. Unemployment there behind a general strike.
Yes, that's right. And perhaps workers there hoping to send a message to those leaders meeting in Brussels. Unemployment in Portugal's 18%. That makes it the third highest rate after Spain and Greece within the EU. This general strike will be the fourth in 2 years. Transport likely to be heavily affected. And it's really called to protest against this tough austerity that Portugal's going through in exchange for the €78 billion bailout that it received. Well, let's take a listen to the head of one of the unions that are taking part.
What we want to say to the Portuguese government, and not only because what will happen here today will affect Europe, is to say we've had enough of austerity policies. We've had enough of the harm being done to the people of our country.
Okay, let's take a look at the markets, Matthew.
Yes, take a look at Asian markets first of all, and they've been having a much better session than we've seen earlier in the week. Most of the markets there trading up pretty strongly. The Shanghai just slipping into negative territory. What's going on there is that slightly lower than expected growth from the US, which stokes up hopes that the bond buying program by the Federal Reserve is going to continue there.
Okay, and next up, one of Sweden's most successful entrepreneurs moving home.
Yes, now this is the man who founded IKEA 70 years ago. His name is Ingvar Kamprad, and he's been living outside of Sweden for 40 years, mainly tax reasons there. But he's decided he's going to move back. He's 87 now, and he says that he wants to be closer to his family and friends. And what's perhaps helping is Sweden's abolished its wealth tax. That's not recently, it did that a while ago, but that of course helps somebody who has as much wealth as he has amassed over these years. He's withdrawing pretty much from running IKEA. He's been handing it over to his 3 sons.
I only hope he decorates his new house from IKEA. Finally, to China, and the boss napping saga goes on.
That's right. So we talked about this yesterday. The American who runs a company called Specialty Medical Supplies, and he went over to China to lay off some of his workers. The other workers there were not very happy and decided to take him hostage. He's been there 6 days now. They say that they're worried they're going to lose their jobs, and they want severance payments similar to those received by their colleagues. They also say they've been missing some back pay as well. There's the man himself. But he says a deal's been done and he should be released this Thursday.
Matthew Warren, thanks ever so much for that roundup of the business news. Time now for web news, starting with